A warm welcome, everyone. My name is Kamal, and I am from Kenanga Futures, and I will be your host for tonight's webinar entitled Introduction to FKLI Futures and Market Outlook for Q4 2021. Thank you for spending your precious time to join us today. Please take note that this webinar is purely for educational purposes and is not in any form or manner of trading advisory. We accept no liability whatsoever for any consequential loss arising from any use of the content of this webinar. Next, if you have any questions for our speaker, please post your questions through the chat box and we will attend your questions during the Q&A session. To post your question, please please pay attention to the bottom of the chat box. Please click on the text bubble icon and it will switch to Q&A chat. Then you may type in your questions afterwards. Today we have Mr. ALFIE, and he's going to share with us about FKLI futures and market outlook for the fourth quarter of 2021. So without delay, I would like to kickstart our webinar by welcoming our speaker today, Mr. ALFIE. Over to you.
Okay, thank you, Mr. Kamal. Okay, okay. Good night, everyone. And I would like to say firstly, I would like to say thank you for joining us today in our webinar live on 7:30 p.m. today. And firstly, let me introduce myself first. My name is MOHAMMAD REZZA. I'm a sales and dealing executive at Kenanga Futures. And today I'm very happy to share some info to you all regarding the webinar entitled Introduction to Kuala Lumpur Composite Index Futures and Market Outlook for fourth quarter 2021. Okay, so to begin our webinar, let me share a disclaimer part of my webinar today. So the presentation slide today is solely for educational purposes and also information sharing. And this slide does not represent any investment advice or not any recommendation or whatsoever. Okay, so let us take a look at the 4 key main agenda in our webinar today. Firstly, I will give you an explanation on the introduction of FTSE Bursa Malaysia KLCI futures and what are the factors that are affecting the movement in the prices. And thirdly, I will guide you all on the successful step in the FKLI trading, and last but not least, the market outlook for the fourth quarter 2021, which I will be conducting on the top-down analysis. Okay, so to begin our webinar today, let me give you a brief overview of the Malaysia main capital market, which is the Kuala Lumpur Composite Index, which is also known as the KLCI. Okay, so the history of KLCI begins with the name FTSE Bursa Malaysia KLCI, which is a stock market index that consists of the 30 largest companies in the Bursa Malaysia, which is calculated using their market capitalization. So it was first introduced in the 4th of April on 1986 as the Kuala Lumpur Composite Index, which also known as a short name of KLCI. And when it began, the base value for KLCI is around 100 when it begins on the 1977. So the creation of FTSE Bursa Malaysia KLCI was created. They was meant to replace the KLCI on the 6th of July on 2009. So when they created the FTSE Bursa Malaysia KLCI, it was represented by the 30 largest company in Malaysia. So let us take a look at the constituent company of FBM KLCI. As we know that this stock market index consists of the 30 largest company in Malaysia. These companies are selected from various types of sectors and industries such as the telecommunication, the banking, even energy, travel, healthcare, and also plantation as well. So any movement in the prices of these companies, so it will eventually affect the index price movement as well. So after we know the brief overview of the Malaysian equity markets, let us take a look at the introduction of FTSE Bursa Malaysia KLCI futures, also known as FKLI. Okay, so what is BMD KLCI futures? Short name of FKI is actually a Ringgit Malaysia denominated FTSE Bursa Malaysia Kuala Lumpur Composite Index Futures contract that is traded in the Bursa Malaysia derivatives, and it aims to provide the participants to exposure of the underlying index, which is the KLCI. So the key statistic of this futures product is that they have an average daily volume of 14,000 contracts traded daily, and the open interest stood at 30,000 contracts on a daily basis. And the daily trading range for FKLI is around 22 ticks movement per day. And it is traded in the Bursa Malaysia derivatives. As we know, it is a subsidiary of Bursa Malaysia, which is the only certified Malaysian stock market exchange. This product is actively used by major institutional players and even retail investors when they are going to manage the risk of their portfolios, and also to seek rewards and also seek profit without even holding the underlying. Some of them are using it to diversify their portfolio as well. So the main important things that we will have to understand when we are trading a futures contract is that we have to clearly understand the contract specification. So on this side, we will have to understand the contract specification of the FKLI. Firstly, FKLI, the contract unit is represented by the FBN KLCI, which we multiplied by the Ringgit Malaysia 50, which is what we got as the contract unit. And the price quotation for this contract is quoted in the Ringgit Malaysia, the Malaysian local currencies. And the minimum fluctuation of this contract is represented by 0.5 index point, which equals to 25 ringgit for 0.5 index point. So for one index point is around 50 ringgit. And the trading hours is almost identical to the Malaysian stock market trading hours, where we got the first session at 8:45 a.m. in the morning, then stops at 12:45 p.m. in the afternoon. Then we resume on the second session at 2:30 p.m. and finish at 5:15 p.m. And it's traded on Monday to Friday, except for any public holidays. So the listed contract is the spot month, which is normally the active month of the calendar. And then also the quarterly months also are listed as well, such as March, June, September, and also December. And the final trading day for this FKI contract is on the last day of the contract month, which means that if you're trading the July month, 30th July will be the last final trading day. So the specialty of this contract is that the settlement method is that it is a cash settle contract, which means that if you forgot to close your position, it will automatically close the position for you, because it is a cash settle product. So the initial margin to trade this product is around 4,200 ringgit Malaysia, and by using that 4,200 ringgit Malaysia, you gain a leverage of 17.85 times when you are gearing, when you are trading this product. So we'll take a look at the right side. The value for one futures contract is around 75,000 ringgit Malaysia. We can get it from we take the base price of FKI, which is the 1,500, and we times it with 50 ringgit. That is the notional value. So 1 tick of the contract is represented around 50 ringgit. So just to give you guys a slight example on how this futures contract works. For example, you guys are bullish on the market and you expect the price to rise in the future. You just long one July FKI contract, which is priced at 1,505. And later during the period, the futures prices rose to 1,517, which you can see there is a 12 tick difference between the closing price, between the closing price and the opening price. So from there, you will close the position by taking an opposite direction, which is you short the July contract futures, which means that you already closed your futures contract. So the profit you will gain is around 600 ringgit, which you can get from the 12 ticks you times with the 50 ringgit. That is 600 ringgit you gain per contract. If you trade more than one contract, you will gain more. So the liquidity aspect is a very important thing when we are trading futures product. So we have to know the liquidity in the FKLI product as well. So FKLI product, they have the average around 250,000 contracts, which is traded on a monthly basis. And the open interest is also showing a very, very strong level at 35,000 lots per month. And when the liquidity of the FKI provide the participants the ease of trade, which means that participants can enter and exit a futures contract with relative ease. As you can see that for the year 2021, on the latest month, which is the previous month, which is the June and May, the open interest is averaged around 230,000 in volume traded per monthly, and the open interest is also significantly at around 35,000 lots traded. And so on the bottom side, you can see that this is the trend of the open interest and volume for the year 2020 for the FKLI product. You can see that the open interest and volumes are very, very consistent throughout the years. So this shows that FKLI products are very, very well accepted and is a very mature product in the Malaysian financial markets. So what are the advantages you get when you are trading FKLI features? Firstly, you will gain a low transaction cost, which when you are trading this product, a relatively small commission are charged on your transaction, and normally they are charged on a fixed fee per lot basis. Secondly, you get the leverage of a two-way entry. This is very important because when you gain a two-way entry, you can either go long or short position. You can either go take a long or short position to capitalize on any opportunities that is happening in the market, whether it's an uptrend or it's a downtrend. So besides that, this FKLI also offers safety and protection to investors and traders, as the counterparty credit risks are mitigated and regulated by the Bursa Malaysia and also the Securities Commission. Hence, it is protected from any abusive practices or any fraudulence. So as you know, FKLI is a leverage product. So you will gain the power of futures leveraging, what we call the gearing. So when you're trading FKLI product, you will gain the exposure to the underlying KLCI movement, but you will incur a very small amount of capital. Hence, this will what we call enhance your buying power. Furthermore, this product also provides some protection and can be used as a protection or speculation for participants. Participants can use FKLI to hedge their portfolio and to protect any physical exposure. And even they can also speculate for profit without holding any underlying stocks. And last but not least, we can see that the standardization of this FKLI contract makes it very easy to transfer ownership of the contract between one party to another. So let me explain about the factors that are affecting the price movement in FKLI. So these are the factors that are affecting the price movement in the FKLI contract. Firstly, there are a few factors that we have to take a look at. And the first factor is that the Malaysian corporate earnings result. As we know that the Malaysian company normally release their corporate earning result either in a quarterly basis or a yearly basis. So investors will take a look at this corporate earning result to determine whether the sustainability or the stronghold of the company is a very good choice for their investment recommendation, everything. And investors also can take a look at the Malaysian economic data, which is a very paramount and important things to look for, as economic data such as the gross domestic product, the consumer price index, the purchasing manager index, the trade balance, foreign reserve. These are the economic data that might and will affect the price movement in our underlying index. So in turn, they will also affect the FKLI price movement as well. And we also have to take a look at the Malaysian Central Bank decision, which the Bank Negara Malaysia, they will make a meeting that will determine the overnight policy rate of the country, and even the statutory reserve requirement for the banks, and also the moratorium for the people. Since Malaysia is a fully government controlled country, so any government policy changes will affect the index movement as well. We can see that some tax and subsidies, if they are given and taken, will affect the investor sentiment. And since most of the stock in the Malaysian index are quoted in the ringgit Malaysia, so we have to take a look at the movement of Malaysian ringgit against the USD, which is the international currency. So any weakening ringgit it will show the sign of our country is not doing well, as ringgit should be stabilizing in order to gain confidence for foreign investors. And the demand and supply in industry also plays a very significant role to determine the movement of the index. As you can see that there's always about consumer demands, the goods production, and the technology advancement within the certain sectors or industry that is very, very important to look for when we are determining the demand and supply within the nations. Since Malaysia, we heavily rely on our relationship with our regional peers and also outside country. So any geopolitical issues that is happening around our shoulders, around the nations, will also deeply affect the movement of our stock market index, because we will have to look at the relationship between other countries and also their countries with us. And last but not least, global markets performances such as the US Wall Street indices and also the regional Asia peers are also significant factors that might determine the price movement in the FKLI contract. So let me explain to you some of the key important data that might be important for you guys to know when you are trading this FKLI product. Firstly, you need to know about the quarterly gross domestic product, which is released quarterly on the second month of every quarter. So this is to show how strong our economy, whether it's a contraction or is an expansion of GDP. So normally an expansion of GDP shows a sign that the economy is improving, and contraction shows that the economy is slowing down. So the Malaysian inflation rate, which we measured using the Consumer Price Index economic data, is also released on a monthly basis. So this one to show the value of our ringgit, how strengthening is our ringgit when we take a look at the inflation rate. So on last month, our inflation rate rose about 3.6% to 4%. So this shows that inflation is a bad sign for the economy. And furthermore, we take a look at the monthly trade balance. This one is actually export and import data within the nations, within and outside the nations, which is released on every first Friday of the month. So this one is to gauge how strong is our export and import transaction. Furthermore, we also take a look at the BNM Monetary Policy Committee meetings, which the Central Bank of Malaysia will conduct 6 times per year in order to determine the overnight policy rates and also certain things that are regarding the money supply in Malaysia. And finally, the annual Malaysian government federal budget, which is estimated to be on October or November every year. This one is to see how the Malaysian government are doing with their expenditure and also their deficit, something like that. So as you can see, that investors normally look at the federal government budget to determine the direction of the markets and how the government are going to administer our economy moving forwards. So now that we have known the key contract spec and also the factors that are affecting the FKLI, so when you are going to start trading, you have to be very careful and you have to know some certain steps and successful steps in trading this FKLI products. So firstly, how to trade FKLI successfully. There are a few steps that might be useful for you to understand and to take note of when you are trading this product. So you are advised to monitor some regional Asian markets and also the overnight performance for the US. And you can see that the regional Asian markets such as the Shanghai Composite Index, the Hang Seng of Hong Kong, Nikkei 225 of Japan, and also the Dow Jones Industrial, and also the Nasdaq of the US overnight US overnight markets. And we have to also take a look at the Dow futures during the Asian hours, as this sometimes reflect the price movement of the FKLI as well. So when you are trading FKLI, you must always understand that the FKLI trading session begins on 8:45 a.m. in the morning, which is 15 minutes earlier compared to what our cash market is doing at the 9 a.m. So when you are trading this product, you have to be very cautious during the opening session, because the futures prices hasn't fully reflect the price movement in the cash market. So it's a safe bet that if you want to trade this product, you can begin it on the 9 a.m. in order to fully reflect what is happening in the cash markets. So trading this product, you have to be watchful and very, very pay attention. You have to pay a very good attention towards the announcement of economic data in Malaysia, such as GDP, PMI, inflation, and OPR, and also others. As economic data usually will determine the direction of where the market is heading. So since this is a leverage product, so it is very essential for you to place a stop loss order in order to protect your capital and to avoid your position from going to overloss. And when you are placing a stop loss order, you have to be very sure that your stop loss order is calculated using the risk reward ratio. Normally in equity, we will use the ratio of 1 to 3, which for every one risk that you are taking, you are expecting a 3 reward ratio, the reward ratio of 3, which means that whatever risk that you are taking, you have to amplify your returns. And do watch out for some potential profit-taking activities that might happen, okay, when the market sentiment is not doing very well, because investors are since this is a risky market, so investors are not willing to take more chances in the market if the sentiment is weakening and not doing well. But sometimes when the sentiment is not doing well and the market suffer a heavy decline, there might be some bargain buying opportunities that might set in, because when the sentiment is not doing very well and the price drop, there might be some attractive valuation for investors to recoup the cheap stock, and also what we call the bargain buying. And we also have to take a look for the on the final quarter of the year. Normally there will be some window dressing by fund managers. So these are those important movement in the markets that we have to take note of. So after we know the successful trading stats for trading FKLI products, so let me share some market outlook for the fourth quarter of 2021 that might be useful for you in order for you to gauge and know more about the markets. So from a top-down analysis, when we are looking at the market outlook, we have to analyze it from a global aspect first. So on the global aspect, you can see that most global economies are seen recovering very well from the pandemic crisis. As you can see that US market has hit multiple high in the previous few months, and European market also doing very well, and Asian market are kind of lagging because we are currently the epicenter of the pandemic. But however, this does not mean that Asian markets are lagging behind, because there are always index are always a tracking movement, so they will always track their regional and their competing index as well. So we take a look at the CBOE volatility index, which we normally call the Wall Street fear gauge. So currently, as I see, the VIX index is still below 20. It's around 18.79. So this shows that the fears are still lingering in the markets, and which means that the world hasn't moved on from the pandemic, because the concerns over the spreading of the Delta variants is also dragging down the index. And thirdly, the highly contagious Delta variant coronavirus are seen spreading very fast across major continents. We can see that worldwide are actively trying to solve this Delta variant issue through vaccination program. However, this Delta is a very evolving types of coronavirus, so it might dampen some of the market sentiments across the globe. So the global vaccination program around the globe is running very well and is on track. So some of the nations might reach the herd immunity process, which we can see that countries such as England, countries such as in the Europe and US are starting to lose their restriction, which shows they are trusting their vaccination program towards reaching the herd immunity. But however, unemployment rates within the major nations are still remains high, as this pandemic has induced majority of the business has shut down, and layoff happens, which people lose their job, which we can see it through the United States initial jobless claims. These are the important data that we take a look in order to gauge the unemployment rates. So on the commodity aspect, we can see that gold, which is one of the commodities that currently stay elevated, because of the expectation of the inflation level in across the world is expected to rise. So gold is a very, very good commodity in order people to use it to hedge against any inflation and also currency debasement. And on the agricultural side, you can see that the demand for various agricultural products also remain robust in the fourth quarter. And supply tightness concern also persists during the fourth quarter, as you can see that the unfavorable weather in the United States and also the labor shortages due to the pandemic restriction has caused the supplies to go down. And last but not least, the most important commodity, which is the crude oil. You can see that crude oil prices currently rose above $70 per barrel, and they are projected but to go higher once the travel restriction around the globe has eased. So this one is just to show you guys the comparison between our main index, the KLCI, against our regional Asian competitors, the Shanghai Composite Index, and also the Dow Jones Industrial Average of US. In a 1 year basis, you can see that Dow Jones Industrial Average has rose about 14.56%, and it has reached multiple record heights, which is backed by their strong vaccination program, also their solid corporate earnings for major of their index-related counters. As for our Asian markets, Shanghai Index, they strengthened a little bit, but however, they still suffered a decline of 0.58% within a year, despite their GDP recovered strongly in the first half of 2021. But however, our FKI index, our KLCI index did not perform well during the first half of 2021, and also the second half. As you can see that the rising COVID-19 cases across the country, and also along with the political uncertainty, also has dragged the index to 6.69% decline within 1 year. So the Malaysian analysis, we'll take a look at the local aspect. We can see that our GDP are expected to grow cautiously, and the view are mixed. As we can see that the Finance Minister Tengku Zafrul has revised our GDP forecast to 4% instead of 6.5 to 7%. This shows that there are something that dampening the market sentiment. So our GDP has to be revised in order to make it more realistic in what is happening in our Malaysian right now. And our export grew considerably. Considered that our trade balance are doing very well in the first quarter. We can see that the expansion is around 48%, and this shows that our export figures is doing very, very well. However, some of the Bloomberg analysts are predicting Malaysia are heading towards what we call failed statehood. However, this opinion has been widely debated across the industry, as people will require more solid and concrete factor to show that Malaysia is heading towards a failed statehood. And our extended lockdown, such as our PKP and our EMCO, everything has dampened our business activities and also our retail consumption. So extended lockdown is definitely not very good, doing very good for our economy's movement. Besides that, our political turmoil and the nation instability also is one of the main concerns that is driving away our foreign investors. As foreign investors, they normally seek for the political stability within a nation in order for them to inflow their money inside our country. So since the OPR rate has been reduced to 1.75%, and so the banking stocks and sectors which constitute the index heavyweight, they might suffer from the compressed interest income or margins because of the low interest return they receive due to the lowering of our OPR. And as you can see that major analysts across the industry have also revised their year-end KLCI target, which previously they have a projected it will go around 1,800. However, after they revised due to the political uncertainty and some of the factors such as lockdown, the new KLCI year-end target is around 1,600 to 1,700. So this is the 1 year chart to show our price, our movement of the index FB and KLCI within 1 year. You can see that it is in a declining trend from the in a 1 year basis. However, it found the support at 1,500 level, which show this is a very strong psychological support, and the bargain buying started on the level of 1,500, which means that this bargain buying are the one that buoy the market and leave the market from going further downwards. So after we know the global and local aspect, we have to take a look at the certain sectors that might be attractive and might be worthy for investors to look for. So since the oil price has rebounded strongly above 70 barrel, oil and gas counter are expected to be supportive as global consumption also returned after the ease of travel restriction. However, the Delta variant might reduce some of the demand growth because this is a very highly contagious Delta variant. And also the higher crude oil supplies, which previously that OPEC producer has agreed to raise the output to 400,000 barrels per day. And so these are the main things that might cap the upside of the oil and gas industry. And the counters that worth looking for is that Petronas, Dialog, and also Hibiscus. So on the banking sector side, it remains good throughout the year as banking counters still offering attractive dividend yield. And the moratorium did not impact any of the bank's earnings significantly as the bank has a very strong buffering system in order for them to cushion themselves against all these uncertainties. However, the lowering of OPR might disrupt their earnings, as you can see that most of the banks suffered compressed interest income during the year 2020 due to the lower OPR. So we take a look at the agricultural side as well. This agricultural sector remains good, as we can see that our main agricultural commodities, which is the crude palm oil, are showing very strong buying from top importers India and China. So these two nations are buying more of our crude palm oil, and we are exporting more towards them. And also our weakening ringgit, which is now at 4.25, have made our palm oil much more cheaper for some of the price sensitive buyers such as India and also Pakistan. And we have to take a look at the widening the soybean oil to palm oil premium between these two competing oil prices. So currently soybean oil are considered premium over palm oil, and the premium level are widening. So this might offer some opportunity to our crude palm oil as a very, very attractive alternative of food consumptions. And tightening supplies throughout Malaysia for the year 2021 also have lifted the markets, as our supply are expected to be around 17.18 million tons for the year 2021, which is below our analyst expectation of around 19 million tons for this year. However, our crude palm oil has been massively accused by United States and also European countries due to the factors that they are saying that we are using labor abuse. However, these are some things that is debatable in the industry because they still haven't have the solid and concrete proof that we are using forced labor to run our businesses. On the consumer and food sectors, we can see that is very supportive as consumer demand remains stable because of the essential goods that they are, and also the online buying and delivery also make consumer and food sectors to improvise their business through all this online delivery and also online sales. But however, those business across Malaysia are still remain closed due to the extended lockdown. So this might somehow dampen a little bit of the consumption. And rising inflation also plays a significant factors to determine the purchasing powers within the sector. As you can see that our inflation rate rises, so this shows that the price of good is going up and the purchasing power of the nation is going down. So last but not least, since we are looking at the recovery themes for the year 2021, most of the investors and participants are looking at the travel, airlines, and also have the hospitality sectors. But however, these sectors remains weak because due to the fact that restricted movements and also lockdowns in Malaysia has proved that these sectors cannot run fully at at a full capacity, because any travel will require cooperation between nations across the globe in order for them to have a global and international travel. However, there's some good news, such as the government are mulling that they might allow some fully vaccinated individuals to go on a domestic or global travels. However, this still haven't been proven yet. So we are still waiting for the right news from the government. So these are the sectors that it might worth for investors to take a look at when they are trying to gauge the movement of the price index in the fourth quarter of 2021. So that's sum up for my market outlook for the fourth quarter in 2021. So let me give a glimpse of what we offer at Kenanga Futures. Firstly, we are an award-winning Malaysian-listed derivative brokers with around 25 years of expertise in the markets. And we provide our clients some daily commentary and also market updates to keep them on track with what is going on in the financial markets. And lastly, we also offered the on-the-go trading, what we call the internet trading, which clients can choose to do transaction either through voice call or also to their desktop and mobile apps as well. So if you have any inquiry regarding any futures product or any derivatives related matters, you can contact us at futuresmarketing at kenanga.com.my, or you can straightly call our dealing line at 0321728300. So that sums up for my webinar presentation today, and I would like to say thank you very much for willing to spend time to listen to my webinar, and I hope the information that I share will be useful for you all. So thank you.
Okay. Thank you, Mr. Alfie, for the presentation. We hope you find it useful and informative. We will now proceed with the Q&A session. For those of you who have questions, please post in the Q&A mode, right? And we will raise your questions to Mr. Alfie, and he will answer. Okay. I think we have one question here. So, Mr. Alfie, is the FKLI Sharia compliant?
Okay, thank you for the question. Okay, to answer that question, FKLI is not a Sharia compliant product, since it is the underlying index constitute of banking, which is not a Sharia compliant shares. So frankly speaking, this FKLI product is not a Sharia compliant product.
Okay. So, and next question. Okay, Mr. Sandra, so question, where will be the strong support for CI?
Okay. Okay, so to answer your question, you are asking where is the strong support for CI. As you can see that our KLCI has previously breached the 1,500 psychological support. So at that point, there will be some bargain buying set in during that psychological support level. So I would say that 1,500 is a very strong psychological support. However, if any of the market sentiments are not doing very well in the future, they might push back below 1,500. So we can always slow down to 1450, our secondary supports. But it is a very subjective, as some people might have a stronger support, but some people might put that 1,400 as their second main supports. So on my point of view, 1,500 is our strong support currently, and 1,450 is our second support.
Okay. Next question here. Let me see. Okay, question by Jason Wong. Okay, can you give a guide to the price discovery at the opening?
Okay, so you are asking for price discovery during the opening. So as I say that our FKLI product begins at 8:45 a.m., which is 15 minutes earlier than our cash market. So the price discovery during this 15-minute period normally does not fully reflective what is happening on the cash market. So they will basically going for the law of supply and demand, law of supply and demand during the first 15 minutes. As I can see that normally the market might go up and down strongly during the first 50 minutes. But however, once the cash market open, it will slowly close the futures to cash basis will slowly either slowly close, slowly narrower because of the futures contract has been fully reflected towards what is happening in the cash market. So that's why it is important for you to begin. It's actually advisable for you to begin trading on 9 o'clock, as both markets are already open. So any price movement will be reflecting between one another.
Okay. Okay, and last questions. It's from Jason. Okay, you didn't touch on the industrial products outlook. So,
Okay.
is there any comment?
Okay. Thank you, Mr. Jason, for that questions. Yeah, I realized that I forgotten to touch on the industrial product outlook. So on the industrial product outlooks, as we can see that global major, what we call the chip shortage is happening worldwide. So these are the main factors that are affecting the industrial product, as we can see that those semiconductors sectors and also the industry that are evolving those technology, they are heavily reliant on chip. So currently, chip shortage are happening across the globe. So supply part will be more on the lower side. So it's worth to take a look at the industrial sector as well, because lower supply will lead to much more higher prices. I hope that answered your question.
Okay, all right. So it looks like we have covered all your questions today. Ms. Alfie, is there anything else you would want to add before we end the session?
Oh, I just want to wish every guys to stay safe and do look out for yourself and just stay at home and just be safe. Okay.
Okay, all right. So thank you everyone. Should you have any further questions, please drop us email, send to futuresmarketing@kenanga.com.my. We appreciate you being here and hope that you enjoy our webinar today. Please take a minute to rate our webinars, and your feedback is highly appreciated. We will post the link in the chat box. Okay. We've said okay, so I have posted the link on the sticky chat box, so please feel free to fill in our feedback form. Again, don't forget to register for our next webinar. Thanks again for joining us, and hope to see you again in our next webinars. Good night and stay safe, everyone. Thank you.